Thank you for joining National Black MBA Metro New York Chapter digital series. This particular series, we focused on the real estate. If you were lucky to join us on Tuesday, the financial literacy series that we held with NASDAQ, you heard of quite a few questions on real estate, and this is ironic that we planned this event to be this Friday. We have dynamic panelists. We'd like to welcome our friends and colleagues from Wells Fargo, Ms. Vonetta Hawkins, and Ms. Luce. I'm sorry, apologies for not knowing your last name of practice and a little bit nervous at the same time. And our friend and colleague from Citibank, Ms. Larissa Longchamp, and my colleagues, Norville Barrington, the Vice President of Communication, and my other colleague, Kavern Anderson, Director of Employment. Real estate is near and dear to my heart. I knew the challenges and perils of purchasing my first home, and I knew what it took to get my first home, and now understand what it takes to hold on to it, and especially in this market. Especially with the pandemic going on, we want to give you the best tools and tips from us, from our business community, to your community, for you to feel like that you have options and choices to make the right decision going forward. So without further ado, I'll turn it over to Ms. Vonetta Hawkins, and she will lead this conversation. Thank you.
Awesome. Thank you, Andrew, for your leadership. I posted a quote on my LinkedIn, and it was really just about leadership and being innovative when we're faced with challenges. So I do appreciate you and Norvell for putting this all together, getting us out here to really help people in our communities. So with that being said, I'll just do a quick introduction of myself and allow Larissa, our other speaker, Larissa and Luz, an opportunity to introduce themselves before we jump into our session. So Vonetta Hawkins, I'm with Wells Fargo, Vice President of Diverse Segments. And what that means is I really just manage our homeownership strategy in the Northeast territories. So New Jersey up to Maine, just really making sure from a diverse segments perspective that we are out in the market and providing homeownership opportunities for our diverse buyers. So really exciting to have an opportunity to speak to everyone today, just to give some good information around homeownership and position and where you're standing at right now. So I will turn it over to Larissa so she can just introduce herself as well.
Thank you, Vonetta. Good afternoon, everyone, and thanks for joining. My name is Larissa Longchamp, and I'm with Citi. I've been in the mortgage business for the last, I guess it's 15 years. And most of that time, a good part of that time, I should say, was as a loan officer. Now with Citi, I am a business development officer, specifically with a focus on our first-time home buyer and our community lending initiatives. So what that means is my activities are focused on working with our home lending officers in the field on a focus of lending to low and moderate income households and in low and moderate income geographies. So again, making sure that that we make homeownership opportunity available to all of the communities we serve. So I'm glad to be here. Thank you.
Awesome. Thank you for that, Larissa. Luz, let's get you introduced as well.
Good afternoon. I'm Luc Lockward. I have the privilege of working at Wells Fargo. Been spending the last 10 years of my life in different roles around housing and preserving homeownership. So I am a community outreach consultant. I manage the Northeast, Delaware up, and my role within corporate philanthropy and community relations, specifically to a team called Mortgage Outreach, is focused in 3 segments: coordinated outreach, nonprofit engagement, and risk mitigation. Essentially, that's listening, seeing, and bringing the feedback and supporting our partners that play in the homeownership and foreclosure prevention space, and hearing from advocates and stakeholders in the housing space. Thank you for having me.
Awesome. Thank you, Luz. I appreciate that. So I'll just talk really quick before I jump into the questions with Luz and Larissa. So when we were putting this all together, Andrew's theme was, we are here for you. And that was, him when he's thinking about his organization and making sure that he brings a platform so that his members can be educated. We really took that theme and packaged up some good questions that really will be impactful for where we're at today, right now in the market. In addition to this session today, this is a 3-part series. So we will be taking you all on a real estate journey over the course of 3 events. So thank you for joining today. And also definitely looking forward to you joining our additional events that's going to be coming up in the future. Today, with the kickoff for the Part 1 series, it's really about how COVID-19 is disrupting the real estate market. And then also to be able to speak with everyone around providing the tools that you need to be successful in this ever-changing environment, whether they're whether you have an existing mortgage or you're in the process of purchasing right now. So those are kind of 2 things for the day. And, today's April 10th, and I thought about April 1st. And typically we're, online or social media or talking to our friends, and there's always a bunch of shenanigans happening with April 1st as it's April Fool's Day. But for 2020, April 1st took on a whole different, platform and a different thought process for all of us, as April 1st was the day that, mortgage payment was due or your rent was due. But, this is the homeownership piece. So your mortgage was due April 1st. So rather than, thinking of April 1st as April Fool's Day and a happy occasion for us where we get to, have a little fun, it really turned into something that was anxiety for homeowners that were facing challenges. So what we want to do today is definitely help you walk through those challenges so that, you're not stuck in the situation. So we'll kick this off with just a question for Luz. So Luz, you have come to us with a wealth of experience as being someone who has been around since the 2008 housing crisis. Talk to us about what the lending industry learned from that experience, and how have those learnings placed us in a better position today?
Thank you, Vonetta. That's a great question. So first, I'm going to put a disclaimer out there. I'm not an economist, but the last, 11 years of my life has been preserving homeownership since, I would say, Wells found me in 2009 at the height of the housing crisis. We had the opportunity to be out there in the community, placing events, working with elected officials, advocacy groups, stakeholders, and be in the front with all the homeowners that were struggling. I would say from a personal perspective, we are very much prepared to what we were facing back then, even though that right now it feels the volume probably, I think it's higher of what it was back then, because this is a hardship that it has affected everyone at some way or another one. One thing that the mortgage industry has now, it's the leveraging of more technology that is available in our hands that we can deploy faster. So I think that's a wonderful opportunity. And also, as everybody running a business, I would say we learn from lessons. What did we do well in terms of everybody in the industry, and what were those things that were areas of opportunity that we can do better now? So I think that for everybody, we're in a good place. And even for what we see on the news or other industry partners, how we are deploying everything faster than ever, I think it's a good position for today.
Awesome. I love that technology piece. Back then, we might not have all been as savvy as we are today. Google is your friend. I stay on it. So definitely, I can definitely see how technology and communications have definitely move the dial and have us all moving a little bit different. And plus, when things happen, we all hope to learn from different situations. So thanks for that insight. So when I think about COVID-19 has, again, disrupted the real estate market, and many Americans are experiencing a loss of income and are now having to make real decisions around their biggest monthly payment, which is their mortgage. So what would be some recommendations that you could offer for people in this particular, that might be in that particular situation?
Thanks. That is a great question. So we begin by going, what is a hardship? Maybe for some folks, they're already experiencing the hardship, or they know maybe 2 months down the line, I may have my job secured, but I don't know what's going to happen. So if a customer or a person can make their mortgage payments regularly, it's advised that you continue to do so. Now, if you can't, it's the right time to ask for help. So you may ask yourself, how do I ask for help? What do I reach out to? I don't know. The best option is for you to contact your servicer, your financial institution who manages your loan. And there are different options that, as you may have heard on the news of what's happening, and other financial institutions making their announcements of what they're doing for their customer. For Wells Fargo, we are providing payment assistance via a short-term payment suspension. What that means, if you're experiencing financial hardship due to COVID-19 and you're unable to make your regular mortgage or even your home equity payment, we can help you through the payment suspension. A payment suspension essentially is a temporary pause of your loan payments for an initial 3 months. So you may ask yourself, oh, is that a forbearance? Yes, it's a short-term payment suspension, what people are known as a forbearance. It is best to request this payment suspension only when you really need it. I'm going to say I have some friends that call me from California asking the question like, hey, should I get that 3 free mortgage payment deal that my bank has? I'm like, what are you talking about? Hold on your horses, right? What does that mean? Let me explain to you what a payment suspension is. You still have, the responsibility to pay your mortgage. But the payment suspension is a temporary relief. So that's why it's, if you can pay your mortgage, please continue to do so. So it is best to request it, the payment suspension, when you really need it, because you may need to repay any missed payments at the end of the short-term relief period. For our customers, we will work with them and encourage them to reference to what happens after a payment suspension period ends. And I know that's probably a question that you may have. So during the payment suspension, what will happen? As the environment that we're living right now, some of these things were mandated by federal guidelines, right? So we won't charge late fees, or we won't report additional missed payments to the credit bureau. So if you're worrying about the charge of late fees, that's not going to happen. Or, they're going to put it on my credit. It's not going to happen. If the account is past due, we won't refer the account to foreclosure at this time. So what essentially does that mean? Sometimes there are folks that they were already behind on a mortgage payment for whatever other hardship. I don't know. Maybe their car broke, or they were going through a divorce, or the other borrower, the co-borrower, died. So they had a previous hardship and they were also impacted by COVID-19. You would think, oh my God, who would go through that? But yes, guys, it happens. So those customers are available to request a payment suspension as well. So after the payment suspension ends, what would happen? If you need more time, at the end of the initial 3-month payment suspension, depending on the loan type that you have, you may have the option to extend the payment suspension up to an additional 3 months for a total of 6 months. If you choose to extend your payment suspension period, you will still need to repay all the missed payments. When it comes for someone for the time to repay, we'll review the financial situation and discuss the options with our customer. So for every person could be different. One person may be missing their mortgage payment for a regular circumstance like X, Y, or Z hardship, but COVID-19, how are you going to get back on your feet? And where are you at today? Let's say you get the 3 months payment suspension. After that time, we will have to evaluate your financial abilities to repay and what we can offer to you. So some of those things will be like the additional time. Maybe because of your loan investor that you have, maybe you will have to provide a lump sum payment to repay the entire amount due at once. Maybe we work into a repayment plan. That is the amount due from the missed payments. We'll divide it into manageable amounts, spread it out over the time. Maybe you qualify for a payment deferral. That means that we'll move the amount of the suspended payments to the end of your loan term, or a loan modification. What is a loan modification? Is we'll change certain terms of your loan, such as the interest rate or the time allowed for the repayment. So let's say that you took up a loan for 30 years and you had already paid 5. So you have 25 years to go. When you go through a loan modification, sometimes changing the terms means that you're going to go back to those 30 years. And then also we'll change the interest rate. What if when you originated, you were at 5%, 4%, and today's rate maybe is putting crazy numbers, 2%. Then that's going to go with the current term. So that means that it's a overview to make your payments more manageable, and your modified payment amount, meaning your mortgage payment, is based on your current financial situation and takes your hardship into account. So I'm going to pause right there because I know I said a lot.
Luz, you're doing a great job. You're breaking it down, and I'm taking some notes. I do a little recap afterwards. Go ahead, continue.
Great. So
you gave us a lot of terminology.
I saw Lance over there. You know, every time I try to explain something, I think about, you know, I'm a business major, and I think about my accounting professor back in college. He would be, you have to explain everything. Like if nobody understands numbers, you have to be very clear, as even a first grader can understand. I'm like, okay, great. I keep practicing on that. So for Wells Fargo, I'm just going to do our portion right now, right? I went through what we're doing. If you're struggling with your mortgage payments, it is best recommended that you call your lender or your servicer. So I know there's a lot of things out there, worries that people don't understand the term. Oh, what is a servicer? What's the investor? So who owns your loan? You went to Citi, let's say, you went to Wells Fargo, and you are interested in buying a house, and then your loan officer offers you several products: FHA, Fannie Mae, Freddie Mac, VA, USDA, those are rural loans, or a private investor. The role of a servicer, in this case, I'm representing Wells Fargo. The role of a servicer is that, as the name says, we're going to service the loan following the guidelines that that product has. So if a person originated an FHA loan, which is pretty popular, right? Easier to get. That means that everything that we do with that loan as a servicer, we have to follow the investor guidelines. So that's why sometimes it's very confusing when they say, well, but Bank of America is doing this, or Citibank is doing this, or my credit union is doing this. Do you know who owns your loan? Do you know what type of product you got? I know, like, my mortgage knowledge right now, since I've been on the preserving homeownership after that loan is originated. When I bought my house, I live in New York now, but I became a first-time homeowner in Texas. When I lived there, I had no idea of the front end. It was like, how would that happen? I have to get educated too. What was the difference of going into a conventional loan or an FHA, and what was the best option for me in terms of product? But that is Larissa and Vonetta's world, and they can probably talk more about that. Also, it is a good time for anybody going through a hardship to educate yourself. I know local municipalities are placing information out there that is candid and fluid to help you understand what are the resources out there. That means that you can check out the HUD.gov website, the Housing and Urban Development. That's an agency that regulates mostly all of FHA and everything that happens in the housing space. If you're from New Jersey, connect with New Jersey Housing, New York, the Department of Financial Services, and also those websites for those federal-backed loan like Fannie Mae and Freddie Mac. I was saying that Andrew and Norvell are going to share these links while we're over, but on the Wells Fargo website, we have a specific link all around the response towards the coronavirus. So if you have an auto loan or a home equity, a student loan, any other type of product, you can one-stop shop to know what's to help out there. Also, it's a great opportunity if you don't know what a housing counseling agency is. What is a housing counselor? So a housing counselor, or the institution, is a 501c3 nonprofit that runs in your neighborhood or in the city that you live. And this is what they do: housing counseling. They help you to get prepared to buy a home. They help you to preserve your home if you're having challenges. They help you with rental counseling. or to access other resources in the community that you may need in terms of financial. Lately, the past 2 years, financial literacy is the hot topic, providing opportunities like this to educate the community in things to better their financial health. So a housing counselor is housing counseling agencies are partners of Wells Fargo. We support them in a philanthropic level, in a capacity training level, and during the business portion too, for in access to homeownership and preserving homeownership. So they are very well educated in the housing space, homeownership and foreclosure prevention to address any needs. When we work with a housing counselor, if you decide to work with a housing counselor, if you want to looking for a loan modification or anything, the home buying process, the housing counselor gets a authorized third party that we are able to work with them directly on your behalf. You may ask, but why do I want that? Well, I'll say the example that I always like to say. We all put gas in our car, right? I know how to do it, but I hate it. So if I can count with a housing counselor to be kind of like my financial personal assistant that most of the time is free, almost every time, 100%, 99% of the time is free. It's a great tool to have. If you need to find out which agencies, I'm local to New York. I serve New Jersey too. We have plenty of nonprofits in all counties. So if you need any reference or where to find it, hud.gov will give you the list. We're going to share those links later. And that's it for my portion. Thank you all.
Luz, I'll just piggyback on that was just some really great information, and I don't have the chat up, but I see some questions I think have been popping through. But I just highlighted a couple of things that key points that you addressed. So I'll start off by saying you mentioned call your lender. So a lot of times when people are getting financing for their buying a house for the first time, they're not necessarily always going to your traditional brick and mortar bank. They might be going to a mortgage broker or a small mortgage lender. So with that being said, what we really would love for you to do is pull out your mortgage statement and call that number on your statement. That is the person or the entity that is actually this person that's servicing your mortgage. So if you went to, ABC mortgage company that's local to your neighborhood, maybe your realtor or somebody referred them to you, and you heard good things about them and you went to them, they're not that person. ABC Mortgage might not be the person that's servicing, they're not going to be, I mean, it might, this for like 99.999%, they're not. You might want to definitely pull out your mortgage statement, and that's who we want you to call. Because that's who can make the decisions as it relates to what options you as a consumer have as it pertains to your mortgage. So again, pull out your mortgage statement and call the number on your mortgage statement. As Larissa and Luz said, Larissa in the business 15 years, Luz, almost 10 years, what have you. I've been in banking, I think 29 years this year. So everybody knows us. This is what we do. People are calling us, and we're literally directing them to call the person on their mortgage statement. So I'll say that. And just some of the other things Luz had mentioned, just around late fees and credit impact and foreclosure processes being on hold. Just make sure you understand whatever you're getting. So for me, I think when I go back to that original question, what have the 2008 crisis taught us? It taught us to read, right? Read everything. Don't just sign up for something just because somebody said it looks good. You want to make sure you know 100% what you're getting. Knowledge is power, so use your power and understand what's really happening. So if you're calling your lender and you're asking for all the options that they have as it pertains to your current financial situation, make sure before you say, sign me up for that you fully understand what you're signing up for. As a consumer, again, the educated decision is the best decision anyone can actually make. So make sure that you read, you're fully engaged, you fully understand. And as Luz gave that analogy around gas, I live in Jersey, I pumps no gas. I would drive from New York on dead E, just to get back to get my gas pump. So yes, housing counselors. I am about that. I would definitely, piggyback on what she said and follow up and say, yes, utilize your housing counselors as that extra advocate for you in this space. And yes, we're telling you to call your lender on your mortgage statement. However, these are additional tools that can help you understand some of the terminology that your lender might be saying to you. And the housing counseling agencies, the counselors there are professionals. This is what they do. And they can help guide you and hold your hands as you walk through this process. Because sometimes that's all you need is somebody to hold your hand and help you understand what's really happening. So Andrew and Norvell will definitely at the end of the session provide all of the links. So we gave the HUD, the New Jersey, the New York, Fannie, Freddie, Citi, BOA, Chase, Wells Fargo. So I gave them a bunch of things to be able to give to you guys. So Luz, did you have anything else to say or?
Yes, that was great. First, there's a question that came in. I want to address that.
Yes.
Real quick. And then also, okay, I'm pulling here. I forgot to say, after my initial rodeo, being out there frontline with customers crying back in the day with the housing crisis, it was a very rewarding, but very overwhelming because seeing thousands of people in one room crying over their home, it was not an easy task. But I remember, and this is something that I say all the time, challenge asking questions. When you call your servicing company, you call your bank, your financial institution, you're not understanding, it's always good to say, what does that mean? Sometimes, and I saw many times when I became an underwriter, meaning I was on the other side of the computer modifying those loans, finding the best workout option. Do you need a payment suspension? Do you need a loan modification? What can we do for you? And it was not very easy to give denials to probably a person who could be my grandmother or my siblings or my mom or families with kids that right in front of my face. But it changed a whole deal for me when I provided the verbiage or the way that I communicated a denial, why she didn't qualify. And that customer gave me a hug. He's like, I'm so relieved right now. I had been trying for 3 times and I never understood. So explaining and asking questions is essential, especially in an industry that we're not very familiar with. So the question that we have is, what happens when someone has completed their 3 or 6 or 12-month forbearance and they need a modification, but the servicer has a denial or that says it can't go above 10 or 25% of the increased payment. By denial, I mean guideline that says that they can do a modification with a payment of the 10% increase. So that's a really good question. And the person who asked this, who's Janelle, it's a great question. This is like underwriting thing, right? Essentially, when you mean the investor guidelines is that dictates that. So let's say a picture of this. If the payment that a person had before for a mortgage payment was $500 and then they went through a hardship and they make less income, a modification that you give them sometimes increase the payment because you had interest that got accrued, foreclosure fees and costs, and everything that gets chunked into that brand new loan that you're going to build. If this person had less income, how would you harm them with increasing the amount that they're going to pay on their mortgage? Essentially, in day-to-day digestible terms, they cannot longer afford that loan with the income that they had. So sometimes, when I was in underwriting, I would see examples like that, that the modified payment it couldn't increase. It was increasing above those percentages. So that means it's a denial. But again, it's going back to investor guidelines, and every situation of each customer is different. And I think we don't have any more questions. I hope this helped. Jenna? Janae. Oh, I missed the I. Sorry, guys. This is too tiny on my phone. Janae. That's a pretty name. Thank you.
Awesome. Thank you. Wait, is there a question too? I think that was the same. Okay. Yeah, I think that was, let me see. Am I missing something? Okay. I think, give us your opinion about bi-monthly payments. Interesting.
Right? I rarely see that. Honestly,
Right.
I don't have a professional answer to give, but I'll pull back of like, guys, I hated business math. I hated business math. I hated economics when I was in college. And life is so funny that now this is what you do. Some people say that you can pay your loan faster that way, but honestly, I'm not proficient on that one to give you a solid answer. Sorry about that.
I will say the one thing when it comes to, however you're going to structure, your payments, if you're going to do it biweekly, just do the math. If your lender can potentially offer you a amortization schedule that shows the biweekly payment, then you can definitely utilize that amortization schedule to be able to see when you're going to pay your mortgage, it's going to pay it off earlier, how much earlier. So I encourage you, if you're looking to do a biweekly payment, then definitely, number one, speak to your lender, because sometimes lenders may not offer an option for a biweekly perspective. Just again, it goes back to who's servicing that loan. So, I was given an example. So the state of New Jersey offers a bond program for first-time home buyers. And that's people looking to buy a house. They provide a mortgage, a bond mortgage. And on that mortgage, you're not able to do biweekly payments. So that is their requirement. So again, everything kind of goes back to who your servicer is, who is servicing that mortgage, and what kind of options do they have. So if you're looking to potentially get that biweekly option, they can give you an amortization schedule, and that schedule can kind of break down when that mortgage is going to be paid off with that from a biweekly perspective. And they can also let you know if that's something that your servicer allows. Okay, Luz, that was fabulous. I thank you. Okay, ends up paying 13 months. Good information. I love it. Right. So biweekly helps you pay faster. On how the housing, what is your assessment on how the housing market next year? Do you think it'll be good time to buy a house? Oh, you asked the right person that question. So wait a minute, please hold. Okay, I'm like, my whole screen just went, bye. So it is always a good time to buy a house. Let's be clear. So yes, today, tomorrow, next week, next year, it is always a good time to buy a house. Vonetta Hawkins' opinion. So Luz, thank you so much for all of that valuable information. I think anybody that had some concerns, I think that your answers, while some of them have been Wells Fargo specific, I think that from a general perspective, they could, definitely touch on, a high level answers for everyone. So I appreciate you. Thank you for that. So right now what I'm going to do is just open up a conversation between myself and Larissa, from a purchase perspective. So yes, we understand that there's a lot happening with COVID for people that are experiencing payment challenges. However, people are still in the process of buying. So just going to give you guys a little bit of background so you kind of understand where we are from a homeownership perspective in this country, and why it's so important to keep everyone on the journey. So the homeownership rate, which homeownership rate is calculated by looking at the amount of homeowners in a specific segment, right? So the homeownership rate as of 2019 for all Americans is about 64%. So 64% of the country that are able to buy actually own a house. But when we break that down from a race perspective, 74% of whites own a house, 55% of Asians own a house, 47% of Hispanics own a home, and 42% of Blacks own a home. And in 2019, it marked the 50th anniversary for the Fair Housing Act. So based off of these current home ownership rates, where only 4 out of 10 Hispanics and Blacks own a house and 5 out of 10 for Asians, we have a great opportunity for growth, right? So really, with that being said, there are many people today, even with COVID-19 disrupting the market, that are still in the process of buying a house. So what happens, what's happening with them? What are the challenges that they're experiencing, and how can we help them maneuver through those challenges? So Larissa, for us, I want to say, let's talk about some hot topics that our home buyers are experiencing and how we can help them move forward. So, one of the first things that we were just kind of putting together, compiling some of all of the market, the pulse of the market is what I'll say. Larissa and I and Luz, we are out there in the market all the time, understanding the pulse of the market, because it is the heartbeat of what makes this market move. So when compiling our list of things that are impacting the home buying process, one of the first things we talked about was the ability to tour a house. So Larissa, if you want to talk to our audience about, what does that look like for them, and how can they move with their realtor partners in that space?
Yep. Yes, I'll do that. Thank you. But actually, Vonetta, before I even get to that part, there's one more thing I just want to say about the fact that people are certainly still buying right now. One of the unexpected sort of consequences, or I should say impacts of this whole crisis, is that a lot of us probably recall that in about a month and a half or 2 months ago, when we started to realize that this was going to be a crisis, is that there was a lot of volatility in the markets. So a byproduct of that is the fact that mortgage rates dropped again. And so going back to that question about whether it's a good time to buy or what's a good time to buy, I know we've heard it over and over the last several years, but it's worth saying again that mortgage rates are very low, and they really are, again, near historic lows. And what that means is it makes it cheaper to buy a home. And for some people, that can translate to increased affordability. So it definitely is still a good time to buy, and people are still purchasing. So talking about the process, there are still purchases happening right now, despite the COVID-19 crisis, and it's just happening in a little bit different way. So the first thing that you brought up is, can you still look at a home? And yes, you absolutely can. Now, how does that happen? Of course, number one, it's going to be case by case, the comfort level, your comfort level, and a seller's comfort level in terms of having a person in their home. But there are actually virtual tours. So one of the benefits of where we are today versus where things were several years ago, last time we went through a crisis like this, is that, as you mentioned before, we now have technology. That's why we're able to do this Zoom conference today. And that's why we're still able to carry on a lot of the activities that we normally would carry on, despite being told to stay at home. So you can actually tour homes virtually. And a lot of actually realtors were doing this even before COVID-19. And the technology is it's come pretty far. So you can actually go on to the listings, and what you'll see is normally, like if you were to go to like a listing site, like a Zillow, for example, or wherever it is you're looking at listings, when you go on where you would normally just say, contact the listing agent to set up a showing, they actually give you options of setting up a virtual showing versus an in-person showing. Now, of course, it's not going to be 100% the same thing as if you were to walk into the home yourself. But again, the way that the technology's come, and the fact that, realtors have gotten pretty good at how to do these things, how to sort of move the camera around, and how to get a good feel for the home, you still can tour homes virtually. And if you're actively looking, what that can help you do during this time is sort of narrow down your options. So you certainly can still tour home virtually if that's the choice that you want to make. So municipality.
And I would even say, connect with your realtor if you haven't already connected with your realtor. Comes to that ability to tour the different states, depending on where you're looking to purchase at, whether it be New York, New Jersey, wherever you're looking to purchase. The different states and the governors have different policies out there around physically going into someone's house. New Jersey, Then there's even been different things that you might have to sign. So that's something that's new, so that if your realtor partner, your agent that you're working with, are looking to show you a particular property, then there are forms that are out there now that never existed before. There's COVID-19 forms, like a release form that you would have to sign prior to going in to see any property, if you're able to get in with your realtor physically. So definitely two things I would say from the ability to tour a home. If you're looking out there in the purchase market, shopping around, we can all do drive-by, so you can definitely see a property that way. Go check out the in the neighborhood and all that good jazz. And then the virtual piece, definitely something that's key. And then that last part, if you are brave, I'll say, to go into someone's house, even if it's there are new construction properties that's never been lived in and all types of things like that. I would definitely say connect with your realtor, because there might be something that you have, some type of document that you may need to sign prior to entering anyone's houses. So I just wanted to add that piece. And then another part of the home buying process is partnering, or part of the process is connecting through municipalities. So a lot of things happen on the back end that our home buyers might not be aware of. And maybe we can let Larissa just talk about some of the things that are happening from a municipality perspective that might be impacting your particular process, and maybe your realtor or your lender have had these conversations with you already.
Yep, that's right. So this is one part of the process that most of us, and particularly if you're a first-time buyer, would not think about, and that is the municipality. So what role does the municipality play in the process? Could be a couple different things. Once you've gone all the way through the mortgage process and you found your home, you've applied for your mortgage, when it comes time for closing, there are actually documents, the documents that you sign at the closing table, that need to be sent to your local municipality for recording. So when we talk about municipalities, we're talking about the town, the village, the city. If you're in New York, it's New York City. Or if you're in another area, it could be the county. So your actual local municipality. Documents like the deed that you sign at closing, the actual mortgage document, the security agreement, the note, those documents actually, after the closing, what happens is they get sent to the local municipality and they get recorded. And by recorded, what we mean is they become part of public record. So you personally don't do that. That's the title company that usually takes responsibility for doing that. And that may happen anywhere from a few days or a few weeks. And in some cases, it could be even as much as maybe a month after your closing takes place. Once that happens, that means that the fact that you own that home and the agreement that you have with the lender become part of public record. So one of the impacts of COVID-19 is that a lot of municipalities have closed their physical offices. That means, though, that some of those documents might not be recorded right away. Some title companies, through the title process, have insurance that may protect against the gap. But it's a conversation that you definitely need to have with the lender up front. And if you're in New York and you're being represented by an attorney, it's a conversation you want to have with your attorney, because that could be an impact to the process. The other place where it could also come into play is when you're applying for down payment assistance. So a lot of times there are, as many of you may or may not know, there are programs available through counties, through cities, again, through local municipalities that offer additional funds for down payment and for closing costs. Those programs, and they're a great, excellent resource, those programs are usually going to have income limits and certain restrictions around the type of property and the purchase price that you might pay. If you are taking advantage of one of those programs, those are also a lot of times funded by a municipality. So it's important to check and find out, if you're working with one of those programs, whether they're still open and whether they're processing applications still, or whether they're still able to close, because that municipality or whoever manages that program is going to be providing the funds at closing. So you want to make sure that they're sort of open and running and they're able to provide those funds at your closing, so that all of the money is there at the closing table. Again, those are conversations that you'll need to have with your lender or with your attorney if you're working with an attorney.
Awesome, awesome. I love the piece about the down payment assistance. Yes, first of all, if you don't have money, if you're looking at the process, see if there's some free money out there to get. Always good to get free money.
That's right.
Another big thing that we're hearing out in the market is just around appraisals. So there are a lot of, again, we go back to people are not able to go into people's houses potentially. So, and that also includes the appraisers. So appraisers are the ones that go out and actually does the value of the property. And at this time, some appraisers are still going in, some appraisers are not. Some lenders maybe have stopped appraisers going in. Some lenders may still allow appraisers to go in. But there is a lot happening from an appraisal perspective that might be impacting your actual process. So Larissa, did you want to maybe just add a little more color to that appraisal piece?
Yep. So appraisals, that's another step in the process we have to think about, and we have to think about how it's impacted here. So first of all, just to make sure, to kind of level set, make sure we all have the same understanding, the appraisal is the step in the process for once you found a house that you like and you've applied for the mortgage. Your lender is going to work with an appraisal management company, and they're going to send an appraiser out to the property. And this is different. It's important to make this distinction. The appraisal is different from the home inspection, right? So the purpose of the appraisal is to determine the value of the home, to make sure that the price that you're paying is really what the property is worth. And they do that by doing an inspection under normal circumstances. They do that by doing an inspection. So they look at the house inside and out, or the property. They take pictures inside and out, and then they compile a report based on the inspection and based on data about that property and about other comparable properties. So given the situation that we're in, obviously that's not going to happen today the way that it normally would. But believe it or not, it doesn't necessarily have to stop the process. So one of the things I think, again, comparing this to previous sort of crises, and I think most of us probably remember the financial crisis 2008, 2009, one of the things here is that a lot of the sort of players were very proactive in thinking about how this is going to impact us and what can we do to sort of to solve for some of those issues. So in the case of the appraisals, depending on the type of loan you're applying for and depending on the loan program, there may be alternatives. So there's something called an electronic or an automated valuation model. So they may be able to use sort of an electronic report that takes the same type of data and information about the property to come up with an estimate of value. So that might be one alternative to having a full appraisal inspection. They may also be able to do, so some appraisers may be able, instead of going into the property, they may be able to just drive by, take exterior photos of the property, and believe it or not, and this applies more for refinances, but if you, for example, were refinancing, you might be able to even provide pictures of the inside of the property yourself. So that's one possible alternative. And in some cases, they may be able to even do the exterior inspection only, which is where they would drive by the property, use the exterior pictures, and then use that combined with the data that they would pull up through public record and use that to come up with an estimate of the value. So it's all going to depend on the individual loan program and the loan type, but the important thing to know there is that the appraisal, there may be an alternative to the appraisal that will allow you to continue through the process. Again, it's something that you want to discuss with your lender. And you certainly, if you haven't already started that process, or started the mortgage process, you certainly want to discuss it up front and find out what alternatives there are based on the loan that you're applying for.
Awesome. And I know we spoke about the appraiser, and Larissa touched slightly on the home inspection. So that's something that you do in the very, very beginning of your process. Once you found that house and you're super happy, that's when you're out of attorney review, that's when you set up your actual home inspection. And Larissa, let's chat just, we don't have to go long for the home inspection piece, but this could also, if you're in the very beginning of your process, or even you started the home inspection and there had to be some things done and they may have to go back. So let's maybe talk a little bit about the home inspection.
Right. So the home inspection is going to be different from the appraisal in that, and you know, the virtual tour, for example, in that the work that needs to be done in a home inspection really can't be done virtually. Why? Because it's important that the inspector get to see the property and see it sort of in person with their own eyes, because what they're looking for in a home inspection is the sort of structural soundness of the property. And one of the benefits of the inspection is it'll tell you what might need to be fixed today, but it may also tell you what might need to be fixed a few years down the line. Very detailed. It looks at things like, you know, the electrical, it looks at wiring, it looks at the walls. I mean, it's very, very detailed and really looks at the structural soundness of a property. Now, a home inspection is not always required. So if you're in a situation where you want to move forward and you're comfortable, it is not always required for most loan programs, but it is certainly a benefit to you as the buyer. And it certainly protects you. And in some places, it will also help you negotiate price. So you do an inspection before you sign your contract and agree on a final price. So it might help you negotiate if you find out that there's something significant that needs to be fixed in the property.
Awesome, awesome, right. So the good two things to take out of that piece around the home inspection is an appraisal, no matter how it's done, whether it's electronic, a drive-by, a full inspection, or desktop rapid value, an appraisal has to be done for to buy the house for our buyers. Home inspection does not, for the most part, I'll say. And, you know, I guess if you're an investor, an appraisal. And how you're paying, depends on how you're paying for it. An appraisal might not have to be done. But if you're getting a mortgage, an appraisal is going to have to be done. So, but the home inspection, not necessarily. So thank you for that. Another big impact that's happening in our market is just around credit scores. So a lot of buyers have been just having some conversations with their lenders, or maybe just hearing out in the market that there's some credit score updates that may impact your current mortgage approval. So you may have submitted your pre-approval, got that letter saying you are pre-qualified or pre-approved to buy a house. You're out looking and shopping, and you're so super excited. Then COVID comes in, shake us all up, and now it's like, there's some changes that might have occurred from a credit perspective. So, and again, let me just take one step back, Larissa, before you talk about the credit piece. This right here is informational from a high level. These things may not be impacting you and your current process. You may not even, no one's may have not even said any of this to you. So that's fabulous if they have not. However, we want you to understand that these are potential things that could impact your process. And if they do, at least we were here today to help educate you on what that might look like. So Larissa, talk about some of the credit score changes that's kind of been going on in the market.
Yep. So in some cases, there may be credit score changes. And also I want to mention, kind of expand on a point that you just made. When you start the process to look for a home, before you found a property, a lot of times you'll get pre-approved. When you pre-approval is great because it gets a lot of the work out of the way while you look for a property, so that once you found a home that you like and you're ready to submit that application, you've already provided documents, you've already had them reviewed. However, it's really important to know that sometimes guidelines change and programs change, and you may not be locked into those same guidelines if you haven't started the formal application process. So what that means is, again, and I don't want to sound like a broken record, but it's important to stay in contact with your lender or even your realtor, whoever you're working with through the process, to make sure that the requirements for the program that you're looking to apply for have or have not changed, to see how that might be impacted. Now, in some cases, credit score requirements might have increased. In some cases where you might have needed, say, a 620 to qualify, the same program may now require you to have a 640 score to qualify for it. And then also some, and that's going to vary from one lender to another. So some lenders may have tightened their requirements, some may not have. Also, in terms of as you go through the process, it's also important to make sure you protect your credit score as you're going through it. And this applies even when we're not in a crisis like what we're in right now. Things like making sure to continue to make payments on time. If you anticipate, of course, that you're going to have any issues, and I think we mentioned this before, but again, it's worth repeating, is communicating early and often with any creditor. So that might mean your credit card company, your student loan servicer, or if you have a car loan. If you anticipate you might have any issues, communicating early and often and making sure that if it's necessary that you're asking for maybe any workout options you can, so that you can avoid late payments or issues that might impact your credit significantly. Because again, going back to that pre-approval, or even once you've found a property and you've started the mortgage process, any changes to your credit that happen during the process, they will look at, and that could impact whether you're approved or whether you're not approved. Or you could be approved, and if something changes on your credit that drops you below, say, that minimum, then, or if you have additional debt, for example, it could mean that you're no longer qualified. So it's important to make sure to protect your credit score and to check on any changes to the loan program that you may have that you may be applying for.
Love it. I love it. So now I'm going to move us along a little bit, only because it's in respect of time. So it's around 4:28. I want to touch on 3 quick little things. Closing process, time frame, and capacity. I'm going to group that in as one. So the typical mortgage process maybe you signed that original contract when you went into when you found the house, you signed a contract and it said we're going to close in 45 days. So you've been through this whole time waiting for your 45 day to be up and your closing day to be here and for you to get the key. And then COVID came again, shook us up, and now that 45 day might not happen. Calm down. It's okay. So, Larissa, from a closing process and time frame and capacity, let's maybe just talk to them so that, just so that they have a little understanding. Maybe things might take a little bit longer.
Yep, you said it. So it just might mean you need to USA a little bit. Again, you got to communicate with whoever you're working with. So to your point, first of all, a lot of times when you sign a contract, when you start the process, there's a specified closing date. And the goal is for everybody to be ready. That means you as the buyer, that means the seller. Everybody should be ready to close by that date. However, what's happened here is that, it's great. I'm happy to say that, banks, everyone, realtors, and again, we just talked about the appraisers, for example, attorneys, people really are still kind of up and running. They're still doing business. However, they might be doing it in a little bit of a different way. So I can say for us, in a lot of places, we have a lot of people who are working from home. Again, the great news is they're still able to work and they're still able to continue to work through the process. But it just means that things may sometimes take a little bit longer because there's, first of all, you might have technology issues. You might have sort of changes in processes. So, I think we're all adapting. And I have to say, I think we're adapting fairly quickly, but still we're trying to figure things out and we're adapting as we go. So it may take a little bit of extra time to get, first of all, that loan application processed and to meet that closing date. The good news is, everybody's in the same situation, so all the stakeholders are going to understand that. But again, that's where that communication becomes important. And there's one other thing that we hadn't mentioned, but I want to just add here is that if you're purchasing, particularly if you're in New York, if you're purchasing a co-op, there may be an additional impact there. Co-ops, as you know, or you might not know, But with co-ops, there's that one other player. So there's you as the buyer, there's the seller, there's your bank, but then there's also the co-op themselves. And the co-op usually is represented by an attorney, and there may be that other step where there's a board approval, there's a board meeting, and there's a board approval, and then their attorney has to participate in the closing. So again, I think co-op management companies, most of them have closed their physical offices, and what they do is they too have their staff working from home. But it's a matter of making sure that that attorney is available to process documents and review documents, that someone at the management office is available to send documents that you may need, and that they're available to attend the closing.
Awesome. And that co-op piece was a great piece to add. And, you know, one thing I will say is when you start this on your journey to become a homeowner, you have, you know, I'm going to go old school. Remember back in the day, T-Mobile was like, who's in your five? Like, who's in your five? The mortgage process is the same thing. Buyers, everybody's working for you. Okay, so it is your lender, it is your realtor, your attorney, your home inspector, your title company, all of your homeowners, and whoever's going to do your homeowners insurance. Everybody works for you, and they're part of your five. So I will definitely encourage, if you have not already done so, pull together your crew, right? Pull together all of the people that's involved in getting you those keys to that house. So Zoom is now the new thing, right? Get everybody on a Zoom call. Pull them all, get your mortgage person, your attorney, get everybody on one call so that everybody's on the same page. Because what you want to make sure is if something is and I will tell you, every aspect of the homeownership process could be impacted. So whether it's your lender, it's your realtor, it's your attorney, it's your home inspector, it's your homeowner's insurance company that's going to give you that policy, everyone could be experiencing something. So you want to make sure that all of you guys are on the same page when it comes to you, at the end of the day, that new title that we all aim for, homeowner. That's keys. So pull everybody together, get them all on the same page, because, you know, and Larissa, if I can just maybe wrap it up, I would say, stay on the journey. People, stay on the journey to home ownership. Don't get off the journey, even though there might be obstacles and you walking uphill, like that little thing in the Price is Right game, that little mountain man, even if that is you. It is okay. It is okay. Change happens. It might take you a little bit longer. Whatever the case may be, maybe the lender you're with has certain guidelines that maybe somebody else doesn't have, and you need to just flip from that person to somebody else. Get everybody on the same page. Make sure everyone is talking. That's part of your crew, your homeownership crew, and then stay on the journey. You know, back to that 4 in 10 Hispanics and Blacks own a house. Can't have y'all getting off the journey. It needs y'all. So, Larissa, did you want to close out anything? Because if not, then I will turn it over to back to Andrew.
No, I'll just close out by saying exactly what you just said. You said it perfectly. I agree 100%. Stay on the journey. You know, you have people to support you, and you certainly have tools. You know, it's as simple as communication, the email, the Zoom, whatever it is, but definitely stay on the journey. And I hope that this information has been able to empower everyone to continue on that journey.
Yes. And let's get it turned back over to Andrew, see if we have any additional, or in Norvell, if we have any additional questions or next steps.
Hey everyone, we want to just remind everyone that we are going to do more of these series. So this is just the beginning of many questions that will be answered by our experts. And if you do have any additional questions, please let us know. We're going to have this session again, and answer some more questions next week, and before we go to our second part of the series. and I'll turn over to Andrew for his closing comments.
1 second, Andrew. I'm sorry.
Yes.
1 second. Somebody just put a comment in the thing, and they said, "Is the cost for condos or co-ops going down?" I know we have one of my friends, a realtor partner on the line, Lance Maiden. I don't know, Lance, I know you're in New Jersey from a realtor perspective, but from a house purchase price, what I am aware of, I don't think prices have changed due to COVID, I'll say at this point. But Lance, are you able to answer that?
Sure. Thank you for asking.
Sorry.
There's a few different things that come into play right now with condos and co-ops. Some sellers may be more anxious to sell and move out of state or relocate, more anxious than maybe before. So there could be better opportunities for deals. But on the flip side, according to the condo building or the co-op building, they may not be in the best financial shape considering this pandemic. So although you may save some money on a condo or a co-op, you may end up paying more for maintenance or different fees that the building itself may require. So it's definitely a balance that you have to closely look at. The financials of the building, the cost of the maintenance, any surcharges, plus the actual cost of the unit. And then you also have the taxes and homeowners insurance, just like a regular house. So there's a lot of different variables that whatever professional team you're working with that's helping you, like Vonetta said, you definitely want to ask all of these questions.
Thank you, Lance. I didn't mean to throw you on the spot, but I appreciate that. And the one piece I would just add to what he just said, just around the condos at the association. So I sit on a board for a condo association, and this literally was one of our topics of conversation at our board meeting at the end of March. And it was around our homeowner association dues. I will tell you, the association that I manage, we're a very sound, profitable homeowners association, and our homeowners pay a small homeowner association fee. However, there are people that are going to be impacted from job loss and might not be able to make their monthly fee. So what does that impact? That impacts everything. It impacts projects that we have planned out, because maybe we won't be getting the amount of money that we get from a monthly basis. So a lot of things come into play where your association might not be financially sound in the future if it was impacted negatively by COVID. But the thing about that is, what does that mean to you, right? Like, this is all good information. What does it really mean to you as the buyer? What it means to you as the buyer is, if you purchase into a condo, townhome, and that has an association that manages it, and that condo management association is not financially sound, that could impact, number one, your purchase, and it could impact, number two, your refinance in the future and or your sale in the future. Because when lenders are looking to lend against a condo or a co-op or a townhome, that development itself has to be approved. So if it's not a financially sound development, it might not get approved just because of that. So be cautious, be aware, be informed again around what it is that you're purchasing. All condo co-op associations, they all have to hand over this document that kind of talks about their fiscal responsibility and their financial soundness. But also know that that could definitely impact you from a future perspective. All right, okay. Go ahead, Andrew.
Hey,
Luz got something.
Yes, this is Luz. I know you were touching about the HOA, your homeowners association. After you're a homeowner, and if you don't pay those, so people, oh, they don't care, I'll be behind. They can put a lien on your mortgage, and you don't want that. So, I'm current. Yeah, I'm paying my mortgage every month, but then you don't pay your HOA. That means title, your mortgage will get a lien that it can even push you into foreclosure in certain municipalities. So I know it's very important that we, you know, PITIA, payment, interest, taxes, insurance, and association is all paid. That's all, guys. Thanks.
Thank you. Sorry, Andrew.
It's okay. This, like I said before, when I got you guys to do this, it was more about sharing information, less about me talking. I think I talk a lot. I know Norval is probably laughing, like, you know, I'm constantly talking. But again, happy Friday. Thank you from us with Metro Black MBA Association, and sharing with us and sharing with our community at large. Especially like to thank Ms. Vonetta Hawkins, Vice President, Diverse Segments at Wells Fargo, Ms. Larissa Longchamp, Business Development Officer at Citi Mortgage, and Luc Lockward, Wells Fargo. And the one thing I want to stress, I know the pandemic has on everyone's minds, but we want to offer our knowledge, our support, and more importantly, our resilience in this time. It's important to reflect that that even in challenging times, that we're able to keep our heads above water. We're able to keep pulling along. We're able to keep pushing along. And I truly believe that, you know, we'll come out for the better. So if you have any more questions, please feel free to reach us through our newsletter. I'm sure Norvell will send out the questionnaire to the participants to today's WebEx. And this is a series. This is a journey. This is step one in the journey. I'm very excited where this journey is going to take us. Again, we're here to inform, we're here to inspire, but more or less as a business community, we want to make sure you invest. So with that being said, I'd like to wish you a very happy holiday, and look out for more programs from us in the future. Norvell, did I forget anything?
No, thank you very much. We'll send out a survey post this event, and everyone have a good Friday and have a wonderful evening.
Thanks for your leadership, gentlemen. Thanks, everyone.
Thank you. Thanks. Bye-bye.
Thank you.